In this video, I'm going to share my master plan for this crypto bull run. Bitcoin just broke its all-time high, and that isn't even the most bullish data point in the market right now. However, I do think that this is time sensitive because things are moving really quickly. So today I'm going to share my plan for making as much money as possible this bull run, and importantly, my plan for selling, cashing out, so that I can actually keep the money that I make. Welcome back to Dynamo DeFi. In this channel, I teach you about crypto investing from the perspective of fundamental analysis and economics. I've been investing in crypto myself for 7 years and taught tens of thousands of people to invest in crypto through these videos. But remember that nothing I say is financial advice. This is solely intended to be educational and informative. Now let's get into it. To start, let's look at where exactly we are in the market cycle, which data points support the fact that things are looking very bullish, and where we might be able to expect things to go from here. And I think it's really important that you start to study these things now if you're interested in crypto, because I truthfully think that there's probably less time than many people are expecting. I'm uber bullish, but I do think that time is running out. So let's look at Bitcoin. Decisively broke its all-time high. Night of the US presidential election went from under 70,000 to thousands of dollars above its previous all-time high, around 76K, and it's since gone over 76K. It's tapped 77K, and it looks like it could be heading even towards $80,000 and above. And just, you can see how decisive that was from the high earlier this year. And why did it do that? The short answer is that crypto industry feels that the current administration in the US, the SEC, has, to put it lightly, not been favorable. To put it less lightly, they've basically been tamping down on crypto businesses, crypto innovation in the US. A lot of people who run crypto businesses have moved their businesses overseas. They've delayed launching tokens or canceled token launches entirely. And there's generally a feeling that if you really want to innovate on chain and try making these new sorts of financial products, that you can't do it in the United States. And the Trump platform was very favorable to crypto. And so there's a lot of hope that that is going to change soon, especially with new SEC leadership. And then there's even talk of more things now, such as building a strategic Bitcoin reserve for the United States. This is a US Senator, Cynthia Lummis, saying this a couple days ago. And so people are very hopeful, right? And that's reflected in the price. But what does that mean about where we are in the market cycle? Well, important thing to note is that history never repeats, but it always rhymes. And this is the Wall Street cheat sheet for the psychology of a market cycle. And this is not crypto specific, but it applies generally to the crypto industry. So usually things go from disbelief to hope to optimism to belief to thrill to euphoria, and then they start to decline and go into complacency and into a bear market. And our goal is going to be able to spot when things are going from optimism to belief to thrill. This is really when you want to start selling around this part here, thrill or belief. And then by euphoria, you basically want to be out of the market, right? You want to have made your money by then. Let other people ride that most explosive candle at the end because you may not be able to catch it. And then, you'll be sitting pretty with all your money when the market goes into complacency and then into a bear market. And then maybe you want to invest again after it's declined. So let's look at what happened in terms of crypto in the last market cycle. Well, the first thing to note is last market cycle, let's look at this first all-time high break. So it broke its all-time high from the previous cycle 3 years prior over here in December of 2020. And what happens is it really takes some time for that news to percolate. Bitcoin's at an all-time high, and it didn't just tap an all-time high, it's holding above an all-time high. And people who maybe had written off the market start to realize, hey, actually, those coins I forgot about, they're back in profit, or they're almost back in profit. And people start to steadily buy in, and eventually it has so decisively broke its previous all-time high that it starts to reach mainstream news. And that's when you start to see an explosive rush of money, including a lot of new money, into the ecosystem. And you can see that This happened back in 2021, where it went from around 20,000 in December up to 64,000 in April. And the thing I want to note there's a lot of candles here, right? One day. However, that's actually very, very fast. Basically, you had 4 months from all-time high break to local top. Now in 2021, we were very fortunate because it went down here and then it actually went back up and just barely broke its all-time high and then retraced. And there's a lot of, sort of interesting reasons why this part of the bull market was very different from a traditional crypto bull market. Overall, for example, on-chain activity, transactions on Bitcoin were far lower here than they were over here. This was a lot, in some ways, more of an NFT and DeFi bull run, but regardless, you had a chance to make your money back. But the thing I want to emphasize is all-time high break. If we can convincingly break this, get to 80,000, you're going to see a lot of new interest pour into crypto, especially with these tailwinds from favorable regulation coming. And I could see a scenario where we go much higher very quickly and then hit a local top. And my current mental model is probably we get to some sort of local top, likely sometime around inauguration. And the reason why is that typically people are going to expect things to change faster than they actually will. So people are going to front run that, get really excited for things to change. And then as it takes a little bit of time, the excitement will start to wane down and the market will start to sell off at some point. But I don't think that's the end of it. And I'll talk about why later in the video. But to support this thesis that we are entering the most bullish phase of the bull market that we've seen so far, I want to share some information. And 2 of the most important stats that we like to look at on this channel are stablecoin inflows and Bitcoin ETF inflows. And the reason why is that these 2 together basically represent new money coming into crypto. Stablecoins, those are things like USDC, USDT, typically backed by dollars or short-term treasuries, occasionally backed by crypto or more exotic real-world assets. But you can think of those in most cases as it's like real money that's in the crypto market. When you buy crypto on an exchange, usually whatever you're buying, Bitcoin, ETH, Solana, it's usually paired with a stablecoin. And so what you're really doing is you are buying a stablecoin and then buying crypto with that stablecoin. So if the stablecoin supply goes up, it means that more people are depositing money into crypto. Similarly, Bitcoin ETF inflows means that more people, they're DCing into Bitcoin with their retirement accounts, their brokerage accounts, etc., or they're just excited for the bull market, so they're buying it in the best way that they can. That's not crypto native, which would be through an ETF. And now the thing that's different about ETFs is that money isn't really going to enter the rest of the crypto ecosystem the same way that a stablecoin is. However, it's going to indirectly enter it because if people with their 401ks, they're buying the Bitcoin ETFs, they're sending the price of Bitcoin from 50,000 to 100,000, then all those Bitcoin crypto natives who are holding Bitcoin, suddenly their money doubled. So they're going to have a lot more money, and that money is going to then start to trickle into the rest of the crypto ecosystem. And in a minute, we'll talk about how that happens. So to start, let's look at the stablecoins. This is the total stablecoin market cap. Let's look over here. So what is going on here? In the past 7 days, up 2.5%. And that almost all comes from USDT and USDC, which are backed by dollars, short-term treasuries, real-world collateral. And you can just see this huge uptick here. So you've got people depositing money, billions of dollars, in fact. If you just zoom in on this week, I know it looks flat here, but it's actually a lot of money moving from November 5th to November 7th. We added $3 billion of stablecoins. Now let's look at ETF inflows. Yesterday, on the 7th, you had $1.37 billion worth of inflows. I mean, look at this chart of total Bitcoin spot ETF cumulative flow. I mean, even the past few months, as things have been slower, you can see that just people are continuing to buy in. And that's why I said before, I think a lot of this is just people are DCAing into Bitcoin with every paycheck now. And then you have certain events like this where people get especially bullish and they suddenly buy $1 billion worth of Bitcoin in a single day. And just think about what this new source of buy pressure is going to do to the price of Bitcoin and thus the entire crypto market cap as it gets more mainstream attention. But basically, you have a lot of new money flowing into crypto the past week. And so what we can look for from here is as these trends continue, as more money flows into ETFs, as more money flows into stablecoins, then that will hopefully create a positive feedback loop with Bitcoin, where inflows push the price of Bitcoin over 80,000. Bitcoin hitting that key psychological level attracts more media attention, causes more people to start to get exposure to Bitcoin, pushes the price higher, and then you can very quickly get these feedback loops where you have price suddenly rushing upwards. You have the supply of stablecoin increasing by billions of dollars a day. And these things can happen very, very quickly when you get into these sorts of positive feedback loops. By the way, if you want to learn more about these sorts of stats and on-chain metrics and how they all interact with each other, fundamental analysis, check out my Substack, dynamodefi.substack.com. Every single week, I have a free thing that gives you basically everything you need to know about crypto market in 5 minutes, important readings, on-chain analysis, DeFi farms, token unlocks, etc. And then if you really want to go to the next level and learn how to do this stuff yourself, then I've got a premium version as well, where I provide the sort of analysis I'm doing today in depth every week, as well as calling out specific interesting projects that have bullish on-chain metrics and teaching you how to analyze those metrics yourself. Again, it's dynamodefi.substack.com. So that's what's going on with Bitcoin. But I know what a lot of you are thinking, maybe you're not really into Bitcoin. You're into those really juicy altcoin gains. You're into things that are going to give you 5x, 10x, etc. Right? Bitcoin, let's be real. If we can get a 2x, that would be trillions of dollars, $1.5 trillion. In fact, that would be incredible. But a lot of you that you're in crypto, you want something a little more. So here's how these things usually work. Usually, Bitcoin leads the crypto bull run. And what happens is people who they got into Bitcoin late, right? They started buying today at 77,000 because they heard about it in the news. Or maybe even they bought last month, right? They bought at 60,000, 70,000. They got it. They didn't buy it earlier this year. They didn't buy it last year. Those of you who've been following my channel for years, by the way, thank you. But you probably bought Bitcoin somewhere over here, right? Because I've been making these videos for 3 years. But if you didn't, right, welcome. You bought it here. Maybe you decide, okay, this isn't really doing it for me. And so what happens is people make money in Bitcoin and they start to move down the risk curve. And in the past, that meant buying Ethereum next. I think this cycle, because there's a lot more activity on Solana as well as other chains, you're also going to see a lot of people rotating into Solana. You're already seeing that to some extent. But basically, think of it as they rotate into majors. So they're rotating into Ethereum, Solana, maybe BNB, XRP, Dogecoin, other things like this, depending on your interests. You guys know I'm a big fan of Solana and the Solana ecosystem. But they start to rotate into these things. So what you would expect is, Bitcoin convincingly maintains its level above its all-time high. It goes to 80,000, 90,000, and you start to see a lot of money rush into other major tokens like Solana. And Solana's already doing very well, right? But you'd see that then break its all-time high. You'd see that suddenly start putting in days where it was going up 10% in a single day. And then what happens? What happens after that is you get to a point where people who have then gotten into Solana, say late, or people who are not satisfied with the gains that they made, they then start to move even further down the risk curve. So basically think of it as this. It goes from Bitcoin, which is the safest crypto asset, down the risk curve into majors, and then further down the risk curve into smaller altcoins. So you're going to get things that are, further down in the CoinGecko top 100, things that are way further down. They're outside the top 100, right? Maybe they're not even listed on CoinGecko. You're going to get people who are rotating into just straight DEX tokens. By the way, lots of tutorials on this channel about some strategies for analyzing those sorts of tokens. But basically, you have people moving further down the risk curve. And my plan for this bull run is the narratives that I'm focused on are DeFi and AI. And here's the reason why. DeFi, this is for me, well, the channel is Dynamo DeFi, so, obviously I'm interested in DeFi, but DeFi has been like the black sheep of the crypto world for a number of years now. And reason is that it had a huge run up in 2020, early 2021. But first off, to many people, it's not that exciting. I think it's exciting. I like this sort of thing, but, I studied econ in college. I like finance. Not everyone does, right? They prefer things that are a little bit more focused on like fun memes. But that being said, it's still one of the killer use cases of crypto, and it's one of the applications of crypto that has found the best product market fit, right? If you go over here to DeFi Llama, then you can look at deposits in DeFi and see that hundreds of billions of dollars today, even when it hasn't been the hottest thing, they're deposited. And all these things that people like to do, trading meme coins, airdrop farming, that's all going through DeFi at the end of the day. So it's been like the black sheep. And I think part of the reason why there's been a lot of lack of regulatory clarity in the United States about, what can you actually legally do, right? Can you issue a DeFi token that's fee sharing? Can you really have decentralized governance, right? Does the government recognize that as a thing, or are they going to hold whoever created the protocol liable for whatever the protocol does? You've had tons of these protocols received Wells notices from the SEC. And so it's just been an environment where it's been really tough for it to break out. And so I think it's the biggest beneficiary of the SEC becoming crypto favorable and the US easing up on regulation. And if you look, for example, at the past 7 days, you can see that a lot of the top performing coins were actually in DeFi. Uniswap up 15%, Chainlink up nearly 20%, Aave up 28%, Jupiter 15%. I could go on, right? There's some of these. Radium up 49%, right? And so what you have is you have protocols with fundamentally strong metrics, protocols with good products that people just weren't sure whether the token was ever going to be able to accrue value and get out of this, boot that the SEC was stepping on it with. And now people are a lot more confident that this is going to happen. And so which DeFi projects am I focused on? For me, it's all about fundamentals. And the way to think about them is basically they're a new sort of business. They're a business that's built on chain. They're a business that is either decentralized or in the process of decentralizing. And that provides these sorts of self-custodial financial applications. And so the best way to assess those, in my opinion, is looking at fees and revenue. And every analysis I've run that tries to correlate market cap with an on-chain metric, fees and revenue are basically always the top ones. So I like to use this page on DeFi Llama to track the fees and revenue. You can even compare, for example, the ratio of fees to market cap to get a sense of which ones are under versus overvalued. And so some of the ones, for example, that I like, and these are doing very well, but we've been talking about them on this channel for months, is, for example, Aerodrome, right? Aerodrome is the leading decentralized exchange on Coinbase's base network. And if you look at the fees and revenue on it, you can see that it's doing $2 million plus a week recently, and it's just been growing consistently throughout most of this year. Radium is the top decentralized exchange on Solana, and you can see that it's often doing tens of millions of dollars of fees a week, and it's just had a completely explosive growth this year as the Solana ecosystem takes off. What I'm also going to do is look at which DeFi ecosystems are growing. So we talked about positive feedback loops, right? One of the positive feedback loops is more money enters the ecosystem, prices start to go up. That attracts more money to the ecosystem, and it can create this positive feedback loop where things grow very quickly. And for example, this is the total value locked in Solana. Even if you look at it in terms of SOL, so stripping out the price action of SOL, you can see it's grown tremendously over this year and even in recent weeks. So what I like to do is I'm looking for DeFi projects that have those strong fundamentals, those good fees that are built in the Solana ecosystem. Base is another one, right? This is Coinbase's chain. Coinbase is leveraging their millions of users to actually grow their own Ethereum layer 2. They've grown it from only a few hundred million, only, I put in quotes, but only a few $100 million at the start of this year to $3 billion now. Another interesting one is Sui. Sui's really been one of the breakout stars this year, growing around 10x from 1 year ago. One thing to note, though, is there's a lot of inflation to come. The fully diluted valuation of Sui is around $23 billion compared to $6.4 billion in market cap. So there's going to be a lot more tokens that enter the market eventually if you're thinking about investing in Sui itself. However, there are probably going to be DeFi opportunities on this chain because it's a fast growing chain, and with more money entering the chain with a growing ecosystem, that means opportunities, right? When you have something like this, right, like Solana, you're basically playing on easy mode. If you're in a chain that's stagnant, like let's say Solana over here, like that's going to be really tough to make money because it's PvP. If you're in this and the pie is growing, like you're golden, right? It's you're playing life on easy mode. So look for ecosystems like this. And then there's AI, right? AI I'm also looking at, and the reason why should be apparent if you follow the news, if you follow tech, if you like to use new things. It's one of the breakthrough technologies of the past couple of years. And I think that because of that, it's going to be perfectly positioned to capture attention as people look to invest in crypto. And with these, oftentimes it's tougher to assess them by fundamentals using any sort of metric. However, what you can do is you can look at other aspects of the project. So you can look at the team behind it. You can look at whether they have a usable product. Great heuristic is always to say, I'm going to try out the product myself. And if I find it useful, probably other people find it useful too. You can study the tokenomics of it. A few to highlight, a few majors. Near is very interesting. The founder of Near had a acclaimed career in machine learning before founding it, and they're building a lot of features that allow AI applications to be more easily built on their network. Near is also a blockchain that has DeFi and everything, so it could potentially hit multiple narratives. BitTensor is another one I like. By the way, recently I published this deep dive on BitTensor in my Substack, so check that out. And basically, this one is interesting because, first off, it applies Bitcoin's tokenomics to trying to build out this decentralized machine learning cooperative. And also, it's really an entire ecosystem. So you have all these developers that are working within the BitTensor ecosystem and competing with each other to try to receive those tau rewards by building these different sorts of applications. Will it work? I don't know. But I think it has certainly captured the most mind share of AI in the crypto world, and it's even attracted some people from outside of crypto. For example, one of the founders of YouTube recently shared a video that was talking about the thesis behind BitTensor. Other interesting use cases of AI and crypto that seem to actually have some legs are decentralized physical infrastructure networks. That's things like Akash, like Grass, which is up a lot since this token launched, and they're basically building out networks of actual either real physical servers, devices that are contributing to some sort of task, which could be cloud computing that they're renting out. It could be, in the case of Grass, they're scraping the web to train AI. And then you have on-chain agents. And on-chain agents is a really interesting one because that's basically building these autonomous bots on-chain. They use crypto as their payment rails. So hypothetically, let's say this plan works. I rotate from Bitcoin to majors to smaller altcoins. These DeFi and AI narratives hit. How in the world do I know when to sell? Well, as the market gets hotter, you're going to start to see some things that may excite you, but in fact should concern you. And so let's look at a few examples from previous years. Here is December 2021, and this was after the peak, but you still had plenty of time to sell before most of the bear market drawdown happened. So NFTs were going crazy. You had Pepsi from their official account tweeting out, "Yup, we did that. Introducing Pepsi Mic Drop, our Genesis NFT collection. Details in the thread below." Then you had Budweiser responding to Pepsi, "Welcome, brand friend. We're all going to make it." That's what WAGMI stands for. It's like online slang, right? Originally from Ziz, and then it kind of became a crypto Twitter thing. And then you've got Pepsi responding, "Thanks, friend. WAGMI, rocket ship emoji." All right, you might say, wow, these brands are getting in, but this should be a real big top signal, right? When you have brands talking like this, trying to mimic crypto native language. Here's another one from further back. This is from January 2018. New York Times. Everyone is getting hilariously rich, and you're not. They almost perfectly tagged the peak of that bull run. So when you start to see things like this, news articles saying everyone's getting rich, brands mimicking crypto native language, dropping NFT collections, good sign that it is time to start scaling out, right? That is signs you're really in the euphoria stage. Ideally, you had already made your gains before then. You were already starting to book some profits, change your life. But if you haven't already, when you start to see things like that, it's worth considering, okay, maybe I'm going to take some risk off the table. And you never have to sell entirely, right? There's people who hold some Bitcoin indefinitely. But if I see things like this, I'm not going to want to be holding everything, right? Because I don't want to give back the money that I've put all that effort into making from buying low, over multiple years. And then what happens next? Well, I don't have a crystal ball, so I can't know for sure what's going to happen. But my current mental model of this market is probably, like I mentioned before, we get this real bullishness going into a new administration, US government, right? People are expecting regulation to get better. They're expecting the SEC to really lay off, and a lot of companies are going to start moving to the US, launching in the US, etc. And I think that that's going to spark a euphoria and peak at some point. What I expect to happen probably later in 2025 is the resumption of the true adoption-driven crypto supercycle. You're going to have some of those businesses that launched in the US start to find product market fit and gain adoption. Real on-chain businesses start to take hold. People will be using crypto for things besides just trading other cryptos. You have institutions launching real-world asset products. And then you have the big overhang that the US government is discussing whether to start a strategic Bitcoin reserve. And if that ends up happening, and that sparks a rush for other companies, other countries to start their own Bitcoin reserves, then you're going to see a ton of pressure, probably unlike anything we've ever seen before in this asset class later in 2025. And from there, again, I don't have a crystal ball, but I think that you're going to see the market shift much more towards being a long-term fundamentals driven market. If you want more videos like this, be sure to like and subscribe. And until next time, this is Dynamo DeFi.